Good morning, everyone. This is Doug Campbell with Right Way Options and the morning market preparation video for October 10th, 2017. Well, finally, the bulls decided it was time to take a little bit of a rest, and that's all it was just a little tiny rest. And not a big surprise. I suggested yesterday morning that we could see a choppy light action day, and that's just due to, we had a banking holiday. The banks were all closed, and so just a little bit less activity in the market. And so we just camped out for a little bit and rested. I know there were some folks that probably were panicking, and one of the reasons that occurs is we fail to take profits into strength. We allow greed to kind of get in the way of taking those gains as the market is moving up. We want to maximize them. We want every penny that we can get. But when that happens, then we start reaching those points where the market rests or pulls back a little bit, and then we kind of are in a panic situation because profits that we once had are starting to slip away. Now, obviously, that didn't happen much yesterday, just a little bit of a rest in the market. But I feel really comfortable because I personally was selling and taking profits here toward the end of the week last week. So I'm in a really good position. I still have plenty of risk in the market, but I can allow the market to rest, to pull back, and actually be more objective when I'm looking for new potential trades because I don't have that pressure of holding or trying to maximize every penny out of every trade. Actually, just feel like I'm in a great position. If the market decides it wants to rest a few more days, it really won't bother me at all. Now, what I see this morning here is the futures are actually pushing back a little bit more this morning, taking back some of what they lost yesterday. Nothing major. We could open very close to the highs yesterday, very close to those record open. But we could also see it's very, very common in price action like this that we get that early morning professional pump up, and there's sellers right there first thing in the morning, and as soon as the market opens. And so sometimes you get that whipsaw type price action. If we were to look at the diamonds on a shorter term time frame, and let me just take this to like a 15-minute chart. You can see here was our open yesterday. There's our gap up open, and then we get this whipsaw. And that whipsaw is, just as soon as the market opened, there were sellers there. Sellers came in, and then the buyers came in, whipped it back up, and then it was whipped back down. And that whipsaw price action can be very challenging for a lot of folks, particularly if you chase in at the morning pop. So I'm suggesting today it might be a really good idea to just give it 15 minutes, 30 minutes, and actually see if we've got real buyers stepping in before we hurry up and try to buy something. Not every day is a good day to buy, and not every day is a good day to trade. So I don't know what today will be, and I'm not trying to predict what today will be. I'm just saying let's give the market a little bit of time this morning to settle, to see if we really get buyers stepping in here. That'll be the question. Remember, we've got the FOMC meeting. The minutes, FOMC minutes, coming up here on Wednesday afternoon. So it's very typical for the market to wait for that. You can see it right here on the economic calendar, FOMC. Today, there's virtually nothing on here. We got a couple Fed speakers and stuff like that. Virtually nothing to worry about. But tomorrow, we've got that Fed note that the market typically likes to wait for. And so while it's waiting, we could see just some light volume, choppy price action. So there's no need to chase a morning pop like this in a situation. We need to be a little bit smarter and watch carefully and see if real buyers are stepping in after that morning pop, and see if there's an opportunity for us to trade and pick up positions that have low risk, not be chasing those positions, but taking those low risk entries where price is pulled back or is resting above a price support area or very near it. So if we look at the SPY, take a quick peek. Oh, I got a delay in my charts. SPY had a little bit more price action to the downside, just a little bit more press, kind of a bearish engulfing candle here on the day, but nothing of major concern. And I would say that, even a rest of a few 10 plus days to 2 weeks would not be out of the question, just so that the moving averages can kind of catch up to this move. So a rest in here for a period, pulling back over toward the trend, would not be at all out of the question. Now, I don't know if we'll wait that long, because we're going to kick off earnings this week. On the earnings calendar, we don't have much of anything to worry about today, but remember, Thursday we get results from Citibank and JP Morgan, and then there's more earnings on Friday. And those are the kind of things that will move a market along. So if the price, if the earnings come in very good, we could see this rest only last for a few days here, a couple, 3, before it continues higher. Or we break down from that if those numbers aren't good. So I think everyone's expecting pretty good numbers out of those financials. That's probably one of the things kind of helping to hold the market. But just know that we've got some reason here for the bulls to just be taking a little breather as we wait for some of that data. Let's take a look at the Qs. Qs pulling back a little bit, little dark cloud up here. It's really not a dark cloud cover. It's not covering 50% of this candle. Just a little bit of a resting pullback. Nothing here that suggests bearishness. And in really any of the indexes, nothing suggesting bearishness. Now, IWM had this is building this nice little consolidation, and that's something I really like to see. So as long as it doesn't really break down, we're going to be okay. And IWM, moving back up here this morning, somewhere into the middle of this range. And if that can just continues to camp out in here as we chop over toward the trend, that could really set up a nice potential trade. So keep an eye on that IWM. I really like the way that chart's developing. Let's take a quick look at the VIX. The VIX saw a little bit of a rally yesterday. Nothing major come up off of there. Just that little tiny bit of fear coming in. But it was actually a fairly substantial move, just because we're at such low levels of fear that those pops like that just seem extreme. And all it's going to take is one news event, one thing, and we could really soar on the fear. But right now we're okay here. There's nothing here to be worried about. As a matter of fact, I think this is very well controlled, and everything is looking still quite bullish. If we take a look at T2122, now remember, T2122, there's nothing fancy here about T2122. All it is the 4-week new high, new low ratio. When we get a little bit overbaked up in here, the market pulls back. And you can see we're getting that little bit of a pullback right here. That's a positive thing. Notice that the market has barely moved back, but the T2122 is actually showing a little bit of that resting pullback. So a little more of that, we could see that dip down into here and actually provide us with new upside momentum. It's the rest, it's the pullback that actually attracts new buyers to the market. We all like to see a market running hard, okay? There's no trader that doesn't like to see a market moving up strongly. But it's those rests, it's those pullbacks like this, those resting periods that attract new buyers. And unless we can get some kind of a rest or a pullback, those new buyers are nervous about getting in at these levels. They want to see proof that we're going to hold. So never look at a rest, a consolidation, or a pullback as a bad thing. It's always a positive thing when we see a trend holding and we get that rest or that pullback, because that literally brings more buyers to the market. It builds confidence in the overall trend and allows people to enter with a relatively low risk into the position. And that's what most buyers wait for. So let that pullback, let that rest. Don't get too over anxious about this. As of right now, we look really good and really strong, and we could actually see this push, particularly in the diamonds. For some reason, they love to drive the diamonds right now, and we could see the diamonds even make new highs today, because they're just, I don't know, they pump on the diamonds, trying to move everything else. Just 30 stocks trying to move the rest of the market higher, and that seems to be their favorite place to pump right now. So watch it. We could see that pump a little bit higher, but just be real careful not to chase. All right. Hey, everyone, I want to wish you all a great day, fantastic profits. Folks, if this is the first time you've seen this, please do me a favor and click on that subscribe button for YouTube, and the follow me button on Facebook. That does help me. The more people that follow, the more people my videos get shown to. And if you find this helpful, please feel free to drop a comment on there and click those thumbs up buttons. I would really appreciate it. Everyone have a great day, and I will talk to you all soon. Take care now.